This week is by far one of the craziest weeks I've ever seen in crypto, or the past few weeks have. So today we're seeing one of the craziest crypto market crashes that I've ever personally been through, and I've been through several. I've been through 2018, I've been through March 2020, and today we're going to talk about what the big factors are that are influencing this crash and what you need to understand. So if you're new around here, hey, I'm Gregory. On this channel, I turn you into a blockchain master. So if that's something you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to know how to master blockchain step-by-step start to finish, then head on over to dappuniversity.com/bootcamp to get started today. So yeah, we do these live streams Monday through Friday on this channel. So if you want to get up to date on everything that's happening in here, join our live coding workshops and, become that blockchain master like we help you do on this Dapp University, then make sure you turn on those notifications to find out about those whenever we go live. Again, it's Monday through Friday on this channel. So we got people jumping in the chat here. We got Technically, Above Realty, Code Chap, Automatic Beats, Cody, Dale, Chris, Look at the Bigger Picture, Adam, Meta, Zeno, Rodrigo, Robbie Smith. Welcome, welcome, welcome. We got lots of people jumping in here. All right, so let's go ahead and jump into this. This is by far one of the craziest few weeks that I've ever seen in the entire crypto space, as I was saying here on my Twitter this morning when I tweeted out the live stream link. Also, if you want to join these live streams and you're not getting those YouTube notifications, make sure you go follow me on Twitter, turn on notifications there. You'll get alerted about those. I started tweeting the link to the stream below the first tweet in the list there. That seems to actually show it to more people on Twitter, so it works a little better, but yeah, the current crypto markets are looking really, really ugly. Okay, so we've got Bitcoin back down to $23,000, getting really close to its 200-week moving average. Ethereum wicked down below $1,200 into the $1,100 price range. Okay, it's just an absolute bloodbath over the weekend. We've seen a 33% price correction in Ether over the past 7 days. A good quarter of that was taken out over the weekend alone. Lost about close to 20% on Bitcoin over the weekend. And this is starting to smell like a pretty nasty capitulation. So why is this happening? Okay, well, I think there are two big factors that are behind this that you have to understand if you're going to properly navigate this territory. I mean, kind of make sense of this entire space, okay? So the first big factor is something that we talked about on our live stream on Friday, but I'm going to reiterate that and kind of give you some, some more context here. So, what we're seeing in crypto right now is definitely not a crypto-specific problem. We are seeing, massive headwinds for every single asset class on the face of the planet, okay, with the macro economy and the changing monetary conditions that are upon us, okay? So basically, for the past, decade and change, global markets have been on a period of, quantitative easing, cheap debt growth, and we've seen, pretty much an up-only environment for a very long time. And that all changed at the end of 2021 when basically we started to sense that inflation was becoming a problem. It's no longer transitory, that the Federal Reserve wanted to increase interest rates to try to combat inflation and essentially destroy demand to try to help cool off what was happening there. Okay, we've seen lots of other factors that have influenced inflation, like global supply chain bottlenecks, et cetera, but that's been the solution. And so when that's happened, we've seen a complete change in how the entire economy works and really how the entire what perspective on assets are. So as we know that inflation is getting out of control and that the Fed wants to raise rates, what that does is basically makes the entire markets, risk off, where basically people say, hey, anything that looks like it's predicated on future growth potential is basically we want to reduce our exposure to that because we don't think that's going to do as well in the current monetary environment as opposed to the old monetary environment. And so what you're seeing is a massive risk-off event across the board in the stock market, and that's definitely trailing over to crypto, okay? So, I mean, if you look at anything like, if you look at anything in the NASDAQ, okay, or any other major stock indices, I'm looking at stuff that's more heavily weighted tech and sort of the same sort of sentiment as crypto is growth and risk. I mean, it's looking really, really ugly, okay? And so we're seeing the same type of thing in the crypto markets. So on Friday, we saw the inflation data come out, all right? That looked worse than people expected. Okay. So as the Feds decided that they were going to raise interest rates to try to tame inflation, the hope is that we'd see inflation come down over time. That would be good news because I read inflation data on basically a monthly basis. And we kind of get updates on that and say, like, hey, what's inflation doing this month compared to last month? And if we're making progress towards our target of 2%, then that maybe means that we can, eventually schedule when we're going to stop hiking interest rates, or maybe we're going to ease things up, and maybe get back to looser monetary conditions. But inflation data came in worse than expected. Right, inflation was higher than people's expectations, which basically makes them think that, hey, we're not dropping rates anytime soon, and we might raise rates even more aggressively and basically tighten monetary conditions further than what's expected by the marketplace. And so that has accelerated this risk-off event and this insane sell-off that we've seen across the stock market and then definitely across cryptos, okay? To where we've seen stuff like Bitcoin, getting pretty close to its 2017 all-time high. Ether has broken below its previous bull run all-time high of about $1,400. Okay, so that's the first major factor. It's just this macro risk-off event, and there's lots of questions about how what does that mean for previous cycle theories. People think that certain assets shouldn't be going below previous all-time highs. Well, Ethereum already did that. Okay. The next question is Bitcoin going to follow suit and do that next? Are we going to break down below $20,000 and hit a bottom there? Where are we in no man's land? Has the game completely changed? What does this mean for all of crypto? We're going to talk about some of those here in a minute. Okay, during the current economic environment. But the other major factor is what's going on with Celsius right now. Okay, so we've seen as cryptos face this headwind that all other asset classes have, which is basically, this tightening monetary conditions that has depressed prices significantly. It's had a few bigger problems that have exacerbated the issue along the way, like the Terra Luna collapse, okay? We saw that, the Terra Luna stablecoin, the algorithmic stablecoin basically lose its peg and start to go haywire, all right? And that caused a lot of sell pressure on Bitcoin and other crypto assets and sells, okay? In addition to just adding, panic to the marketplace, thinking like, hey, this is potentially an existential threat to crypto and other stable coins, and people want to get it out. So that exacerbated the issue quite a bit. But we have another one potentially with what's going on with Celsius, okay? So what is Celsius? So Celsius is a platform that essentially lets you, I'm going to say air quotes here, air quotes, stake cryptocurrency to earn yield. So what does that mean? Well, it's different from like staking cryptocurrency on a blockchain. So let's say you wanted to stake Ether, like Ethereum cryptocurrency, like on ETH 2.0. Well, you can do that natively, like on Ethereum itself. Like you can run a validator and then lock your crypto up, and it would pay you a passive income reward for validating new blocks. And of course, there's other staking pools like Rocket Pool, Lido, all right, other staking websites. But Celsius is different, where you can earn, yield on assets that don't necessarily have staking. So, for example, Bitcoin. Like, what if you wanted to hold Bitcoin and then earn passive income, with Bitcoin itself? Okay, because there's no staking with Bitcoin. There's no way to like take Bitcoin and lock it up in the blockchain to get, interest. So that's where platforms like Celsius come into play. So they basically are a centralized service where you can sign up on a website, give them username and password, all that type of stuff, and then send them your Bitcoin, and they can pay you, interest or dividends, or however you want to think about it, yield on top of that. Okay. And so Celsius is definitely adding fuel to the fire of what's going on here. So what does Celsius do? Well, how does Celsius get that yield? Well, part of it is a multi-pronged strategy, but part of it is they're taking assets and actually locking them up into decentralized finance or DeFi, and then they are, sort of charging a fee on top of that. Okay, so basically, so you have all these decentralized finance apps or DeFi apps that are powered by smart contracts that let users natively go with their crypto wallet and like stake cryptocurrency. I say air quotes stake, but deposit cryptocurrency like savings and lendings platforms on a decentralized layer of smart contracts, and they can, people can take out loans on the other side, and there's demand for these cryptocurrencies, and they can do yield like that. That's like yield farming with smart contracts. If you got your MetaMask, you're going around liquidity pools, you're depositing in there, and then you're earning yield that way. Well, Celsius essentially, in many cases, sort of just does that for you on the back end, and then you're just depositing into the front end with username and password, and they're kind of charging you a spread of those interest rates. Now, problem is some of these leveraged positions are in trouble. Okay, so let's look at this. And also there's the fear of a bank run where Celsius may not have all the backing that they claim to. So the market is now concerned about a crypto lending company called Celsius, which on Monday said it's pausing all withdrawals. So that was the first red flag. Swaps and transfers between accounts due to extreme market conditions. So part of that's essentially the funds they have locked up in other places could be, improperly leveraged, all right, and could be a liquidation risk themselves. So basically, think about depositing money into a platform like this, and then those funds being leveraged somewhere. And if those get liquidated, then like the money that people have in the platform is potentially gone. So Celsius claims to have 1.7 million customers, advertises to its users that they can get a yield of 18% through the platform. Users deposit their crypto into Celsius, it gets loaned out to institutions and other investors. Users get the yield as a result of the revenue Celsius earns. So, in all fairness, like we don't exactly know how all the yield's being generated with Celsius, right? Like some of this could be, institutional type, through other instruments besides just DeFi. But that there definitely some DeFi going on in the back end. So, but the crypto market sell-off has hurt Celsius. Basically, is down from $26 billion from October. Okay. So the real question here is, are we going to get another insane event with Celsius like we had with Terra Luna, where you see mass liquidations, basically people unable to get their money out of these accounts? Is it going to be another Mt. Gox style event where the website just like turns off or something like that, and users cannot get their money back? So it's another big thing that's definitely adding fuel to the fire. So that's kind of the overview of the two major things happening right now. Number one is that inflation is not looking like it's under control. It looks like things are getting, worse than expected in the broader economy, which means interest rates are probably going to keep going up. Monetary conditions are going to continue to tighten. And, we have this event with Celsius that's starting to look eerily similar to the Terra Luna collapse, which also exacerbated the sell-off that happened in crypto in the past few weeks. Okay. So, speaking of like the crypto prices, since we've seen, we're starting to explore uncharted territory with where crypto's headed right now, with Bitcoin, down to $23,000, getting really, really close to its 2017 all-time high. Ether has broken below its 2018 all-time high. Those are from the same cycle, by the way. We see basically a lot of firsts here, a lot of things that people did not anticipate. People did not anticipate something like Ether breaking below that prior cycle's all-time high. That's sort of like the assumption that, cryptos don't do that. Once they make a new all-time high from a cycle, then things sort of stay above that and continue on for the next cycle, right? So, that is no longer a safe assumption. All right. So let's talk about that. So, I've been talking about this for months now on the live streams, which is basically like ever since we've seen Bitcoin do what it did with a double top in 2021, like basically nobody predicted that. Right? I have an open invitation on the channel. I've said this multiple times, and nobody can still find me a good example of somebody who accurately predicted a Bitcoin double top roughly around the price level, roughly within the correct time range, as what we saw in 2021. And that being said, we have all these models, all these charts, all these statistics, try to forecast, where crypto's headed. And so these assumptions and rules about what it can and can't do and what it's likely to do next, that it's on this 4-year cycle, that, the halvings have so much to do with it, all this type of stuff. We've been talking a lot about how that's just layered on assumption after assumption after assumption, right? We've seen so many models invalidated, so many predictions just get absolutely wrecked. And so part of it you have to think about is like, a lot of those assumptions are outside. Like we have to start like completely distancing ourselves from some of these assumptions that are just floated around, that are almost just taken, they're just assumed, right? And so anyways, where I'm going with that is, what does this mean for crypto right now with the current monetary environment? The current monetary environment has changed, and if we had all these models and sort of frameworks for evaluating crypto and looking at it, were those things that only worked on the previous monetary conditions, and do all those rules sort of go out the window as things change, right? Sort of like all models are, wrong, some are useful. And then it's sort of like trading algorithms. It's like a lot of those things are right until they're wrong. And so are we in a similar type of situation where stuff backfits, backtests accurately across, long time frames under a certain set of conditions? And now those conditions have changed. What does that mean for the entire space going forward? So the first thing I'll say about that is, number one, crypto is not going away. Well, I say crypto's not going away. Crypto as an asset class is not going away. Bitcoin's not going away. Ethereum's not going away. Probably some of the all-stars from the previous, bull run that we just had are not going away. Now, some coins are never coming back, all right? But I've been upfront open about that on this channel for a long time. That's one of the reasons I really stay heavily focused on stuff that has a lot of adoption, mainly like Ethereum, for example. So Ethereum, I really, it's like, I don't really see a future where Ethereum does not come back to its all-time high and pass it and start to make new all-time highs, right? I don't have a timeline for exactly when it's going to happen. That's getting incredibly hard to predict and forecast, especially with the changing monetary conditions right now. But that's number one. Like, crypto is not going away, all right? It's not going away. So number two is, but we don't know what that means for the short term, all right? We don't know what that means because we really have to get clarity from the Fed about what they're going to do with the overall monetary policy and what's going to happen with the economy. Are we going to officially enter a recession? I think we're probably already in a recession right now. And what does crypto do during that time? We don't really know. Could be a kind of no man's land at this point where we start to see new bottoms that people, frankly, just did not expect. All right, but at some point you have to understand that it's sort of like, one man's trash is another man's treasure. One place, like, at some point, it's going to start looking like attractive prices. And in many ways, like, it already is starting to look like attractive prices for people who are just waiting to buy, okay? So at some point, it's kind of like this game of chicken. When you have bull runs, you sort of like this game of chicken is like, okay, when are you going to sell? When are you going to sell? When are you going to sell? And in environments like this, it becomes the opposite game of chicken. It's like, okay, when are you going to buy? When are you going to buy? When are you going to buy? So at some point, like, that buy pressure is going to enter in, where some people say, hey, this is just too cheap. I just can't not do this, all right? Especially for quality stuff like Bitcoin and Ethereum. So it's not going away, but the game has likely changed for the foreseeable future with the overall macro environment. We have to wait to get clarity on what that's going to look like before we really know what happens next. So the other thing about that is, the crypto industry is still hot. You know what I mean? We're still forcefully advancing. And that's one of the things I'm super excited about right now, is that we're already building the next sort of wave of technology that's going to attract new people into the space, okay? And that's where the huge opportunity is. That's why I've said so many times on my channel, like, the best way to make a life-changing result with crypto is not to buy cryptocurrency, although I do that, right? I'm a holder. Just to believe in stuff for the long term, right? But the best way for most people to make a life-changing result with crypto is to work inside the industry, to become specifically a blockchain developer. And that's why I teach that so much on this channel, all right? And especially like right now, there's still a ton of demand. There's still lots of projects that have raised absolutely insane amounts of money who are building that next wave of infrastructure and technology, and they all need developers to do it. All right, it's one of the best ways to break in the industry, reskill. And so, that's exactly why I make these videos for you all, is to help you all do that. So, the last thing here that I would say is, this is definitely not the time to, panic. Definitely not the time to do anything that long-term you think like you're going to regret. Of course, I'm not going to give any financial advice. I'm not going to tell you to buy or sell any crypto during this time. But yeah, I mean, crypto's here for the long term. Right now, just looking kind of rough, and it's hard to tell exactly what's going to happen next. Somebody says, we're at the point. Let's go to the boot camp 2 years ago and change my life. Pay is insane. Yeah, totally. Somebody said it seems like ETH is never going to go proof of stake. No, that's definitely not true. Ethereum proof of stake merge is coming. I'm still betting on that happening this year. Most likely Q3, Q4. So somebody says, I'm from a non-tech background, but I want to become a blockchain developer. So tell me which programming language to learn. I would definitely start with blockchain first. Go check out the YouTube video pinned to my YouTube homepage. How to become a blockchain developer in 2022. That's going to give you the step-by-step roadmap on exactly how to do that. Okay. So basically, there's a lot of people who think that you need to go learn a bunch of other programming languages before you start with blockchain. I totally disagree with that. Also, for the full disclosure and record, I used to think that way, but I've completely changed my mind over time. I was forced to change my mind because of seeing other people actually go through the process of learning blockchain first and getting that result. So there's a lot of reason people think that you have to go learn a bunch of other stuff before you get into blockchain. One is you have developers who are biased on their past experience, where they think that like, hey, I did it this way, and that's the way other people have to do it. It's like too hard. You got to learn all this stuff, and so you better start with the easy stuff. Well, it's not really true, because for most people, like, the best path is not to become a complete expert. It is to do is get good enough so that you can start working and then learn on the job. Okay. And so the fastest, most efficient way to do that is to start with the exact skill that's going to provide the most value, which is blockchain knowledge itself. Get good at that, and then get a minimum amount of skills that you need for the other areas like front-end development or like JavaScript, something like that, and then get better at those on the job. Somebody says, for me personally, learning Node.js was important. Other than that, I don't think knowing Python or Bash or anything helped me that much. Yeah, Node.js is definitely going to be helpful, but I would still say I wouldn't go try to learn Node.js first. I would just start with blockchain. You could learn it on the side, or as after you've already gotten some blockchain experience. How do you know when you have the minimum skills required? The best way is to create a project on your own in an unguided way and put that in a portfolio. And then once you've got that, start applying for jobs. The market will tell you when you are ready. Specific blockchain certifications worth it on the journey to becoming a blockchain developer. I mean, they're not going to hurt you by any stretch of the imagination. But at the end of the day, people care most about what you can do, and your portfolio is going to show them that. Somebody says, do you think, how long we think the bear market will be? No clue. Somebody said, do I think the Solidity devs will be less required because of crisis? So basically the question here is the demand for blockchain developers going to go down because of what's going on with the economy and what's going on with crypto prices? So the demand for blockchain development is not going to go away. So I'm speaking largely from experience here. I was here in 2018, 2019, which was arguably way worse than what we're seeing right now in terms of, funding and all that type of stuff, not just crypto prices. Okay. So back then, we had some projects that sort of went under because they mismanaged their money. Maybe they weren't well funded and they were kind of sketchy. So that can happen now, right? But on the aggregate sense, the demand for blockchain development is definitely not going away. It's still a great opportunity. Whether if you're working in it and you're worried about your skills or your demand, I wouldn't worry about it on a broad sense. If you're just trying to get started, I definitely wouldn't worry about it. There's still a lot of great opportunity. So let's see here. Specific to have experience with permission-based projects like Hyperledger or Corda. I don't really work with permission blockchains. Mostly work with public blockchains. Let's see here. Somebody says, I guess this is the best moment to invest in learning Solidity. Definitely. Definitely the best time to start doubling down on your skills. So we just put out a Solidity live coding workshop last week, okay? So you can definitely go to my YouTube homepage and find that in previous live streams, all right? You can see that, here. All right, so we're experimenting that on the channel, doing some coding live streams. If y'all like that format, let me know. But yeah, we definitely gave that a shot, and I think people enjoyed it. So if you like those live coding workshops, definitely let me know. We're gonna be adding some more tutorial videos coming out pretty soon too. We just put out one on Friday about soulbound tokens. So people talk about like, hey, what are the next hot catalysts in crypto? We'll definitely, people are talking a lot about soulbound tokens. And so we put out a tutorial on how to create a proof of concept for a SBT or soulbound token. This is what I advise getting into blockchain just because the pay is excellent. That's not the only reason. That's a good reason. Most people don't like their job because it's not fulfilling and also because they feel like it doesn't meet their financial needs. So blockchain fixes both of those problems. So it gives you something really interesting and fascinating to work on. You can work remotely, and, it pays pretty well. Where do I see Ethereum in 10 years? I'm not sure if the question is in price or adoption, but both of those things higher than they are today. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. That really helps the videos out so that more people can learn about blockchain. And if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? You can go to my YouTube homepage. You can find any of these blockchain development free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe take a master shortcut entirely, I can show you how to master blockchain step by step, start to finish, over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. Help people with zero coding experience become real world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for